pulse on the current market environment. This is Anton Mattli, co-founder and CEO of Peak Financing, and my co-host today is Feras Moussa, one of my fellow board members who is also principal with Disrupt Equity, which actively invests in and manages multifamily properties. We are honored to welcome Barden Brown, who is Managing Director with Greystone Brown Real Estate Advisors in Atlanta. Barden has been involved in the marketing and sale of multifamily properties in excess of $1.1 billion. Welcome, Barden. It is a pleasure to have you on today. Why don't you give us a little bit of a background about your career?
Oh, yeah, absolutely. Barden Brown. I'm at Greystone Brown. We've been in apartment brokerage for about 15 years or so. The company has been open for longer, probably about 40 years. But I myself started in, I think, the spring of '06, and are based in Atlanta, Georgia, and typically focus on assets built in 1990 and older. Although there is some newer assets in secondary and tertiary markets around Georgia and the Southeast that we work on as well. But I'd say our niche, our bread and butter, is in the Atlanta MSA and assets built in the 60s, 70s, 80s, and maybe early 90s.
Yeah.
That's
welcome
right.
to the show, Bart. I'm glad to have you on. I mean, like we mentioned, you
Yeah,
guys
pleasure.
are a little bit of a powerhouse in Atlanta. So definitely Atlanta's got a lot of interest, almost too much interest. I keep joking that I'm about to get priced out of Atlanta. So glad to have someone kind of really be able to dig in and tell us more of what we know about Atlanta.
Yeah, sure. Happy to do it. Happy to be on. It's my pleasure to be on your program.
Absolutely.
Yeah, right. So obviously, it's on everyone's mind, COVID-19, right? And everyone is wondering how the various markets have evolved during that period. So maybe you can give us a little bit of a snapshot of how this year evolved compared to last year and where we stand right now.
Yeah, sure. So from a COVID standpoint, like many Sunbelt states, Atlanta and Georgia were spared pretty early on and then had a really big spike in July and August. Right now, COVID is pretty stable. It's not going up at the moment. But looking at some of the trends from other states, it's a possibility that turns at any given point. But as it relates to multifamily, we had a complete shutdown in March and through April. And I would say we started to see deal flow trickle back in May a little bit, to June a little more. And then by July and August, really the market was back, I would say. Now, when I say that, 50% of the market I'd still say is on the sidelines, maybe 40 or 50%, but that's still more than enough to make a market. As far as transaction volume goes, it'll certainly be a lesser year than it was in 2019. But the third quarter is one of our better quarters we've had. The second quarter, though, we didn't have a single closing. Almost everything that we had for April. Well, actually, I take that back. I think we actually may have had one right at the end of June. I say that, but there wasn't a 90-day period without closings, at least. But most of the deals we picked back up, they were put together. There were 3 of them that are probably, we're fair to say, are not going to happen at this point. But out of about 13 or 14 that were in the pipeline at that point, almost all the other ones have closed now. So that's some strength in the market that I think that shows that there was some real nervousness for a very, very good reason. But it seems like the multifamily trends continue to be pretty positive. I think there was another little bit of a wave of a mini spook, I would say, in maybe late August, early September, as enhanced unemployment was burning off. How bad would the bad debt collection loss really be without that? But, as we've seen, talking through some of the larger management companies in Atlanta, Province, Meridian, S&P, R. James, almost all of them to a T have said the last 60 days have been stable or up. So we feel pretty good about the health of the market, and then obviously hoping for a little bit more federal stimulus in 2021.
Yeah, we've seen the numbers still look good. What's interesting though is most management companies haven't been writing off the bad debt. So I'm really curious to see once they start writing it off, that is the truth. To me, ultimately, I like cash in the bank, right? What got put in.
Right.
So that's the thing I think a lot of people overlook. And so I'm curious to see where that shakes out. But I wanted to go back really quickly, actually, though, to the deals that you did have. Was there essentially, did buyers expect concessions, and did that happen, or you guys were able to kind of work it out pretty amicably without much of that?
If it was under agreement, actually with a signed PSA, it either closed at full price or it didn't. Every buyer there asked for an extension, and maybe a tolling period, which is just an extension of all dates. And then 60 days later, they wanted a reduction in price. The seller didn't give it in a single deal that I'm aware of. The buyers made a calculated decision to say, hey, things still look pretty good. This is a price that we could live with before. We feel like in our hearts we're deserving of one, but we're going to move forward with that. And they've all been rewarded so far. For deals that were not under agreement, I would say there was a period, maybe June and July, where I think most of the people that did step up to buy the properties that were on the market did get a discount. Not 10% for the most part, but maybe somewhere between 4, 5, or 6 or 7 at most. So I think that those were trading at pre-COVID levels. There might be still some tiny discount that's depending, but for the most part, cap rates are down. I would say nearly 100 basis points. So, if anything, pricing is probably higher than it was.
No, it absolutely is, right? Being on the buy side, Atlanta's gotten more expensive, not less. And
Right.
Unfortunately, the cheap debt that's out there is just, it's compounding that problem, right? And so, I got to get behind getting more comfortable paying up, right? The problem is it gets kind of weird to where you're starting to approach housing prices, right? And it's ultimately why, if you're paying $150,000 a unit, if I can buy a house not far from that, right? Just because
Right.
my debt is better on multifamily, why do one or the other? So it starts to get complicated really quickly on that space.
I think that's an interesting point. Go ahead, Anton.
Yeah. So you mentioned I think three deals that didn't close. So what was the reason why you hit a roadblock there?
Let's see. In one case, there was just a kill letter that came in on a Friday afternoon. I didn't even know about the kill letter for probably a week. I wasn't copied on any correspondence. In that time period, a lot of bad blood was formed, and there was a very, very large 7-figure deposit, and that's probably going to litigation. That's one of them. Another one was one where they had recently, very, very recently, gone hard on their deposit, but there seemed to be some nuance, or at least vagary, I should say, of whether there was a financing contingency or not. There certainly wasn't one that was strictly expressed, but there was some title review period for the lender. There was just a little bit of a disagreement on that. We did pick together the pieces of that one eventually, and they did try to make it together, but there was some belief that the seller maybe not maintain the property, and the sellers tended to agree, and they just said, I'm moving on and I'm just going to fix up the property myself. So it became a bit of just both sides agreed that the deal didn't work anymore after being neglected for 4 months, and the seller just said, I'm just going to renovate it myself.
Okay. So based on what I hear here, it's none of them are really COVID specific, right? That could have happened even without COVID. It's just that somehow they didn't agree to what the original views were on both sides.
Well, there's truth to that of why they're not coming together, but in my opinion, at least, both of them didn't happen due to COVID. I mean, they had no sign of not closing before this, and kill letters were sent, without much explanation, right as everyone was in the middle of a quarantine in early April. But then the reason the pieces, didn't get put back together in these cases were not COVID. They were not a fear that, the collections weren't going to be made. It wasn't that the buyers just got cold feet. It wasn't really anything like that. In one case, it just was bad blood, and the other one was a property that was already 60% full and a complete distress before COVID. It just became more distressed.
Yeah. Okay.
Well, so
no, go ahead.
No, I was going to say, so right now, right, most brokers have been winding down, right, kind of hunkering down for the holidays, so to speak. Kind of what are the deals that you're seeing right now, and really what do you think Q1 is going to look like, right? Do you still think it's going to be the traditional things are getting pent up, waiting for the hypothetical NHMC that hasn't been canceled yet, and then to blast them out after that? Or kind of what are you thinking, the remainder of this year as well as Q1 is going to start to look like?
I think that, can you see me right now? I've got someone calling in.
No, it's okay. When someone, yeah, there we go. Now we can see.
Okay. So I think we just launched Clifton Glen. I think we'll launch one more deal this year. Beyond that, I think we'll tell anyone else that comes near us that if at that point you really want to, it probably makes sense to hold to January. I definitely can think of a deal or two that I think we'll be launching in January. Too early to really say for certain. But I'm pretty optimistic that January is going to see quite a bit of product on the market. I don't know that for a fact, but my read of it is that there will be. A lot of people think that, hey, it won't have this big rush in NMHC where everyone gets together and a lot of product hits the market. But I think that misses the point of it really happens is everyone, goes back home and for the holidays and eat some pumpkin pie and they take some time off and they're energized and they've got equity that they're looking to place. And I think that dynamic will be there. There's some things that could happen. I mean, we're obviously literally on election day.
That's the segue. I set you up, right? So,
right.
Love all the people that figure out what happened right now with election day and, come decide I want to sell. And obviously December is not the right time to sell. But if anyone does want to sell, the Disrupt guys, we're happy to take a look. But, come January, right, I think we'll have people that start to salvage, so to speak, right, what they want to do. And, some people will make a decision to move on and, sell and make that exit, right? So.
Yeah, I mean, we're a divided country, and there are a lot of people, I don't know what the outcome of the election will be in the presidency or the Senate, but there are going to be people that are going to see whatever happens either direction is I'm out, and they're going to make a determination to sell in the next 60 days. And there'll be people that have been on the sidelines that say, maybe I like the results or maybe I don't. But one thing we all agree is markets hate uncertainty. And we will have the greatest piece of uncertainty in our market relieved, hopefully within the next few days. I'm pretty optimistic. By the time we get to January, investors will know the rules of the road.
Yep.
They're going to get excited as they go back home and they come back. And I think there's going to be gigantic demand on the buy side. And I do think that there'll be more product on the sell side. I can't say COVID's going away or some of the 9-month escrows are going away. But I do think that 2021 from an investment sales standpoint will be far more normal than 2020.
Yeah, and then hopefully on top of that too, a stimulus package gets passed too, right? So kind of furthering, just helping me. Yeah, so, we'll get past the election. And to your point, right, half the people are going to be pissed and that half will probably want to sell regardless of which half you're on.
Right.
And, that opens up opportunities. So.
Yeah, you need a differing of opinions to make a transaction market work. So I'm pretty sure we're going to have some differing opinions after this election. So
no, same here. I was literally in the office kind of talking to someone else on the team about just revamping our entire acquisition pipeline, which I never showed it to you in person, Barden, but it's I'd say pretty thorough, right? In terms of just really buttoned up, kind of tracking everything, but really doing a V2 of that, right? Where it is very much like a robot, right? Just everything you visualize and kind of track. So, in anticipation, really our target is like, hey, we got to get this done in December, run a few deals through, but really January, I think it's going to hopefully be a buying spree of some sort. So,
yeah, let's hope so.
Yeah, and certainly, right, regardless of what the outcome is going to be, and even if there are some distress out there of uncertainty that lingers for another month or two, reality is multifamily is still within the commercial real estate space, still in high demand, regardless of how the economy is doing, right? So people need to live somewhere. They may not have to go to a retail shop. They may not have to go to an office, but they have to live somewhere, right? And I think there is a lot of equity out there that recognizes that. and so I expect the demand to be there too. The question obviously is how the overall market will impact the multifamily space, right? I think that's what sometimes gets a little bit forgotten, that if there is a significant downturn on the or commercial real estate side and cap rates increase, that there is also a pressure on cap rates on the multifamily side, right? But in comparison, I think multifamily will do extremely well, certainly in the medium term and long term, right? So that's really what matters at the end.
No,
Yeah,
Yeah.
I agree with all of that. So hopefully, the trends continue. Like you said, people have to have a place to live. Places like Texas, Phoenix, and Atlanta, the true Sunbelt major markets. I don't think there's any shortage of people moving here from the Northeast and Midwest. If anything, I think COVID is speeding that up. And we just aren't really building product in Atlanta. I mean, that's probably one of the bigger differences between here and some of the other Sunbelt markets. Well, I would say Atlanta and Phoenix really are not building enough. Texas is probably doing what they need, and probably Charlotte is the only one where they've really just built an astronomical amount. But even that as it is, I mean, even places, where they've built a lot of product, like let's say Houston, the gap between the A and the C space and the rents is still pretty large. So, do the concessions affect that in Houston? You would know better than I do. You're located there.
So for those that are interested, Houston's been interesting because you don't have institutional. So the price points of A's have come down quite a bit. And we were very, 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 very close on a nice deal that yesterday we found out. We did not win, but we're starting to look at deals that we might not otherwise. Like we would never look at them in Atlanta, right? The cap rates are just way too tight. But in Houston, specifically, you have situations where institutions on the sideline, you have guys that need to sell for a variety of reasons, right? And we can get a good haircut on kind of where they bought it at. So, but yeah, Houston's a little bit unique. But to your point, I think that stands for Dallas, right? Austin for sure. I mean, there's a deal in Barden. I don't know if I told you about a deal in Austin where literally the whisper price versus where it actually shook out was a $5 million difference. So $5 million on a $28 million purchase price, right? Or at that age. So I mean, they were 20% off, right? So I mean, there's a lot of pent up demand, right, in some of these markets. That's crazy.
Yeah, no, that really is. I've not heard of a story of that big of a gap between bid-ask spread. And there was a pretty decent bid-ask spread for the summer, but I would say it is narrowed at this point. Almost all the deals at least we're bringing to market. I'm not, maybe it sells, maybe it doesn't, but I'm not worried about the bid-ask spread the way I was like that, let's say 90 days ago.
Mm-hmm.
So, Barden, you mentioned obviously all the people moving from the Northeast and from the West Coast into the Sunbelt locations, including Atlanta. Where do you see when it comes to the local restrictions, landlord restrictions, and all that, how that is evolving, and do you see any significant changes going into the end of this year and then next year in terms of restrictions on landlords?
So the first one, restrictions of building. The Atlanta, it's not completely unique, but maybe a little unusual. The city of Atlanta will let you build apartments when and where you want them. The city of Atlanta is about 500,000 people in a 6 million person MSA. So maybe, 8% of the population. Most of the major counties outside of the city limits, though, are very anti-development of apartments. Cobb, Fulton, Gwinnett, very difficult, maybe not impossible, but you've got certainly some headwinds to get that built out. During the last 10 years, almost all of the new product was in Buckhead, Midtown, Central Perimeter. Right now, we're going to see a little bit more in the suburbs, but really it's the farther out suburbs that it seems like that's where we're going to see more product built for a combination. The municipality will let you build it, first of all, and there's more and more demand in the farther out suburbs, due to COVID. I think this was a trend that was Atlanta, like sprawls, like many other Sunbelt cities, maybe the definition of sprawl really, but that's certainly a trend that is exacerbated by COVID. So places like Cartersville, we're going to see some product come up there, I believe. Hall County, I think you'll see some more product. But those are like the far, almost exurbs of Atlanta. Your core suburbs, you just can't build it because they won't let you. And as far as rental restrictions, I see no possibility of that the way we've seen that in, say, California or New York City.
That's why we invest in Atlanta.
Yeah. I mean, I don't want to say anything's impossible, but that is, less than 1 in 1,000 chance, I would say, anything meaningful happening in the horizon.
Okay. Very good to hear.
All right.
Very good. Feras, do you have any other burning
I think that's
questions?
what I got. I mean, definitely, Barden, pleasure having you on. Always a wealth of information. And on top of that, the one thing I do appreciate about you is you're always willing to take the time to share that information, right? I think what's really differentiate you. So, kudos to that. Pleasure having you on.
Yeah.
Well, no, pleasure having me, guys. This is fun. This is something I don't do a ton of.
Good.
I don't think my game on this is as strong as you guys. So I'm taking notes. I'm learning.
We don't
really want to share you out too widely. Come on, we want to keep you as kind of our secret broker, right? So.
Yeah. So talking about sharing, right? So let our audience know how they can reach you. Obviously, not for the off-market deals. That's restricted to Ben and Feras, but for all the other stuff.
Yeah, no, it's Barden Brown. I'm in Atlanta. You can shoot me an email or call me at any point.
You want to share your email?
Barden@brownra.com. And it's 678-428-9871.
Okay, great.
Perfect. Thank you, Barden.
Thanks again for joining us, Barden, and we wish you a good rest of the year and then a highly successful next year. Right?
Yeah, you as well. And again, thanks for having me on. And we'll catch up soon. Anton, great to meet you virtually. Feras, as always, great catching up. And tell Ben I said hello.
Yeah.
All right. Well, thank you, Barden. Appreciate it.
Thanks, guys.
Bye-bye.
Bye.